Hey guys, welcome to a new video. So we've had a few green days over the last few days, which is always nice, bit of a relief rally because I feel like we've been getting hammered quite a bit over the last few weeks or a month. Maybe we haven't, but it kind of feels like we have. So nice to have that. But in this video, I'm going to talk about Nasdaq 100 high yield ETFs. I'm going to compare the best because I feel like in my positioning, I haven't had as much exposure to the safer, I guess, high yield ETFs. I think what the last, or parts of this year have exposed us to is we've been getting smashed in some of the more riskier plays, the single stock plays, especially the Bitcoin or crypto exposure based plays, which I certainly have. And so in this kind of downturn that we've had recently, I've been assessing things and feel like I need to be a little less risky and have more basket orientated ETFs, ETFs that hold their NAV better, that don't get absolutely crushed in certain situations when there's a correction or a violent move to the downside. So we're going to compare the Nasdaq 100 high yield ETFs. There's a lot of them. But before we get into it, of course, I've got to do this disclaimer. This video is not financial advice. This channel is purely based on my thoughts as I navigate my own investment journey. Please, please, please always do your own research. So, and please bear with me. I'm just recovering from a bit of an illness. So I might be a little bit off my game today, but I'll try and do my best to get through it. So Nasdaq 100 income ETFs. And now I've compared 9 of them, 9 that I think are kind of the best. There's actually loads. When I started researching this, I was like, it seems like so many have just popped up over the last year. And there must be like 15, 16 of them. So there's a lot. But I've tried to compare the best 9. And I've done it by year to date and also past 3 months. Past 3 months, why? Because some of them only launched recently in the last 3 months, or less than since the start of the year. And so to get a fair comparison, we also need to change the timelines on how we compare them, because that changes things drastically. So here we got the Nasdaq 100 income ETFs year to date, the top 9 that I'm comparing. So I'm just going to show you what the results are straight off the bat and remove this. And so I've got the ETFs, so GPIQ, QDTE, QQQI, lots of Qs, KQQQ, IQQQ, QQQT, JEPQ, QDTY, TDAC. Now, you'll probably be familiar with some of these, like QDTY, that is the YIELDMAX one, QDTE, that's the Round Hill one, KQQQ, that's the new Curve one, IQQQ, that's the, which one's that? That's the ProShares one, and that is the NEOS one. So it's hard to get your head around them all, to be honest. But as you can see, I've ranked them. So this is from year to date based on total return. So based on total return, so this is both distribution and price change, GPIQ comes on top. And I'm not sure if people were expecting that, but I was a little surprised to see that because I don't hear a lot about GPIQ. Feel like people are very exposed to QQQI. That seems to be a favorite at the moment. But that's come out on top. So what on to GPIQ, QDTE, and also this is where, so in here I've got distribution. So you can see how distribution affects things. So GPIQ compared to QDTE, they're very different strategies. GPIQ looks to hold its NAV, it's very stable, whereas QDTE has a higher distribution rate, and so its price fluctuates a lot. So even in a downturn, so the price has actually gone down, the NAV's gone down for QDTE, but the distribution has made the total return very strong. So then in third, you got QQI, that's got a stable NAV and a decent distribution of 13.5%, and KQQQ, that's got, I think this is the sweet spot around the 15 to 20% distribution range, because then it's still able to maintain its NAV, its its share price, and so its total return is still strong. So these are some good players. The top 5 there looking pretty strong. And as you can see, QDTE has done really well considering its price change is down so much. But if you look at QDTY, right, TDAC you can't really keep in this comparison range because it only launched 3 months ago. And this is, of course, based on year-to-date information. So it's not really a fair comparison to include this guy. So if you look at the YIELDMAX one, QDTY, it's down more than 3%. It loses this whole battle. It's basically bottom of the table by at least 3%. So what that shows is that its fluctuation in price, even though the distribution is really high, is that it can't keep up. Unlike the Roundhill one, which was kind of surprising, it had a similar price change, like the NAV's been kind of beaten down a bit. But because it's got a high distribution, it's been able to maintain that high total return of 18.6%. So really interesting to see how some of these strategies play off against each other and which one wins. And I guess it comes down to what you prefer. A lot of people are after more stable NAV at the moment. They don't want to get crushed with their share price to get crushed like these guys, like the Roundhill and the YIELDMAX ones where they're paying over 30%. For me, it's the same. Like, I don't want to have my share price go down so much. I would rather have it more stable or even positive like some of these guys, and then have like I said, that sweet spot between 15 and 20% distribution rate. I think that's really good. So now, as I said, so these are the rankings based on year-to-date data. So distribution, price change, total return. But what about from the past 3 months? Now, some of these, particularly the TDAC, which is from Tap Alpha, that only launched three months ago. And even 3 months ago, it's up. It's almost done better than the YIELDMAX one, even though it's only 3 months old and it's got a positive price change. So what does it look like from if we just compare the past 3 months? So it's more of a fair comparison. We'll remove that, and would you have it? QDTY jumps from bottom of the list to top of the list. I just did not expect this, and I guess it's because we've missed out on that. Year to date, we had that big correction, that crash, if you want to call it that, where the Nasdaq and the S&P dropped about 20% during April, during all that tariff mania stuff, and so that's really hit these guys, the ones that have like dropped their NAV because they weren't able to recover it. But since then, obviously, in the last 3 months, the market's been mostly kind of going up a little bit. Obviously, in the last few weeks, we've had a bit of a dip, but it hasn't been too crazy. And it seems like QDTY, the YIELDMAX one, kind of flourishes in that environment where it's able just to have, the price change doesn't do too much, but it's able to pay a high distribution. And so it's got the highest total return from the last 3 months. So it's really, it comes down to what's the best one? What do you want out of it? Do you want highest total return? Do you want a slightly higher, riskier play like QDTY, where you're buying into those big dips and then it's able to bounce back off them? That's what I think the QDTY and maybe the QDTE ones play into. So they got the high distributions in a better market. They perform better over total return, even though their price change, their NAV, isn't really capturing that upside, unlike some of these other players. Now, TDAC, this is the new one that's 3 months old from Tap Alpha. For me, this is a really sweet spot. It came in at number 3, and it's pretty much very similar, 9.5% total return in comparison to 9.8 and 9.6. So these 3, or these 4 actually, you would consider as the best 4 over the past few months, and even KQQ from Curve. I think that's a great fund, actually. And I think these two, and IQQQ maybe, are ones that I would probably look into more. So, because I think that 15 to 20% is a sweet spot, and then you're still capturing that upside as well. So your NAV's still stable, and you're just not going to get hit too hard in a downturn. So when we look at the year-to-date results, it shows that when a correction comes, then these potentially might get hit hard. Okay, QDT has recovered very nicely. I'm kind of surprised at how well it's done considering its price change. But for me, I'd just rather not risk that. And I think TDAC, IQQQ, and KQQQ are probably the better ones to look into. And for me, I've had my eye on TDAC. I think this is a great fund. It's from the guys at Tap Alpha, and they already have the T-SPY fund, which is the S&P 500 version of this. So it's an income ETF based on the S&P 500, but been performing very well. And this basically uses 0 DTE strategy. So by writing call options each trading day that expire the same day, TDAX seeks to capitalize on the rapid time decay inherent to zero DTE option positions. But it's also got direct exposure to the Nasdaq 100, QQQI, and obviously it's income generation through that zero DTE strategy. And I just really like how it's been performing. Curve is the other one. So KQQQ. So this one here and this one here I like. I just think this kind of sits in the range where you're getting positive NAV, but also a good distribution rate. And I think, it depends on your strategy and if you want really high distributions or you want low distributions like the IQQQ, but, more exposure to or more capturing of the upside. And so you'd probably go for this. If you want a lower distribution, but able to capture most of the upside, you go IQQ. If you want middle range, you'd go between these two guys, TDAC and KQQQ. And if you want high distribution, you'd probably go QDTY, which is the YIELDMAX one, or QDTE. Now, the thing is, for me, I'll probably go in the middle. And I've been looking at the TDAC one. I really like the look of this one, as I mentioned. So I've been looking for an entry into that. I didn't get into it because it's just been rising the last few days. I had a limit order, which didn't fill. But I think what this shows is something interesting, that if there is a dip, and let's just take a look. So this is over the last 3 months. QDTY, because we're beginning slowly going up. Yes, we had a bit of a dip, but we've been recovering into it. But if you look, say, from here to here, where we had the downturn, maybe that changes things. QDTY still up. KQQQ, TDAX, so those are the two ones that I've been looking at. But QDTY is surprisingly good. Okay, let's go year to date, and we'll go from here. See, this is the thing, is like this big dip, and that's why QDTY suffered so much. So if we went from here to here, and yeah, you can see QDTY, even KQQQ did really badly in that dip, and they've just managed to recover a lot. So if you want something, so it shows here that these ones, QDTY, KQQQ, they have better upside when the market's doing well, but if there's a correction, then they're a little bit more risky. But if we go back to year to date, obviously total returns, QDTY, because of that dip, it hasn't recovered, whereas KQQQ has recovered very well. And if we go from the bottom, if you're able to buy into dips, if you're just waiting for big corrections and big dips to buy into them, then your strategy might change again. And let's see what's been doing the best since that downturn. Well, we'll take TDAC out of it because it's only 3 months old. KQQQ, buy a long shot. Look at that, up 56%. So even though KQQQ fell quite hard, it fell pretty hard during that downturn, it's managed to recover quite a lot. GPIQ has done very well. So GPIQ's got to be up there with one of the best ones. QDTE has done well since that time. QQQT. So it really depends on your strategy. Do you want high distribution? Do you want to buy the dips? Do you want lower distribution, but to protect that NAV, a more stable NAV? And it's just something to consider. But for me, I'm looking at TDAC. If we go max again, then TDAC's number 3, just behind QDTY and QDTE, which are the higher distribution ones. But for me, I don't want to worry too much about the share price and the NAV in case there's big corrections. So I think TDAC's the one I'm going to be getting into. But anyway, just thought that was interesting because as we're in this environment where, we seem to be having a lot of dips and corrections. We're not sure what's happening in the market at the moment. Is there going to be a recession? Is 2026 going to be good because the liquidity is coming into the market? Or is there going to be an economic crisis? We don't really know. I think it's smart to... I've been changing my strategy for 2026, and I'll update you on that if that's of interest to anyone. But I'm going to change my whole strategy a bit to be a bit more less risky, de-risk myself a little bit. because I have been too exposed to Bitcoin and crypto plays, even though I think they'll do really well next year. I hope they will. I hope we're not going into a big bear market, but I think liquidity is coming, and I think 2026 will be big for Bitcoin and crypto, and my portfolio is set up for that. But I think what I've learned is that I've got too much exposure to single stocks and Bitcoin and crypto plays, and that to help me sleep at night, I need to have a bit more money invested in basket, safe ETFs, Nasdaq 100 ETFs like Chippy, like Maggie, especially ETFs that protect their NAV and share price is a bit steadier. I think that's a better, safer play going forward, especially with the high yield income ETFs. Because as we've seen, they can just get destroyed so quickly in a downturn, especially if you're in the YIELDMAX ones, which struggle to recover their share price because of that capped upside. Anyway, just thought that might be of interest. Just to show you what I'm looking at. I'm looking at getting into the TDAC one, the one from Tap Alpha, to try and just capture some of that distribution, that 17% annual distribution, but also some of that upside in terms of share price as well. I'll be buying the dips hopefully throughout the year, and we'll see how that goes. But anyway, guys, I'll leave it there. Thanks for listening. Please give us a like and a subscribe if you're not already subscribed, and I'll see you in the next one. Cheers.